Let's understand the financial statements. How to read the financial statements and what the financial statements actually are. Financial statements are the written records that illustrate the business activity and financial performance of a company, of an entity. Financial statements includes balance sheet, income statement, or we can say profit and loss account, and third, cash flow statement. So let's discuss one by one and understand balance sheet first. So what is the balance sheet? Balance sheet is a financial position of a company or of an entity that represent what the transactions going on into the company and a position of that transaction as on date. So balance sheet is an overview of assets and liabilities as on date. Why as on date? Because it is a snapshot. It is a picture of a particular date. It is a position of a particular date. Balance sheet is not made for a period. Balance sheet is always made as on date. In India, we made the balance sheet as on 31st March every year. On the other hand, profit and loss account or income statement is to be made on a periodical basis. That may be 3 months, 6 months, or 1 year. So the profit and loss account can be said as a movie, but the balance sheet is to be like a snapshot, a still picture, because that is a position as of date. If as an individual I have to make my balance sheet, so if I made my balance sheet today, so it shows what is my position, my financial position as on today. With regard to the company, if we made the balance sheet of a company, so whatever the company has gained since its inception, since its starting, whatever the company has gained, whatever company has earned, the financial position we can see in the balance sheet. So balance sheet is an end point of all the financial transaction or all the accounting transaction. Now understand the components of the balance sheet. Balance sheet has assets, liabilities, and the capital. These are the components of the balance sheet. Let's discuss one by one. Let's first understand the assets and liabilities. What the assets and liabilities are. In a very simple language, in a very layman term, if we understand the assets and liabilities, then I should say whatever I own is my asset and whatever I owe is my liability. Yes, once again, whatever I own is my asset and whatever I owe is my liability. Suppose I own a car. So that car is my asset, but I have taken this car on a loan. So loan that I have to repay, that I owe to the bank, is my liability. Car is my asset, but the loan is my liability because that I owe. Car I own. Let's take one more example. If I own a house, so the house is my asset and I have taken a house loan for that to buy that house. So that house loan is my liability that I have to pay to the bank. So now you can understand what the asset is and what the liabilities are. Now what is the capital? Let's understand the capital. Suppose I want to start a business. So to start a business, what I need is money. So whatever money I put in the business is my capital. So who brings the capital to the business? The owner. The owner brings the capital to the business. Suppose I put 1 lakh rupees into the business. So that 1 lakh rupees is my capital. Out of that capital, I will do my business. I'll do the transaction in my business. To understand the balance sheet, I have taken this format deliberately where on the right side we show the asset and on the left side we show the liability. This format is now not relevant. this format has changed. Now we are not using this report to present the financial statement. But I'm not going into that detail of format. I have took this format to make you understand better that how the balance sheet works, because on the one side we show the assets, on the other side we show the liabilities. So at the end of the day, the total of the assets and liabilities will be equal. So the balance sheet is the statement of assets and liabilities. Now move to the next concept, that is liabilities. Suppose to run the business, the money I have put in is not sufficient. That's not enough. I need more money to run business. So what I do, I borrow some money to run my business. So the money that borrows, I have to repay. I owe to the lenders, I owe to the banks. So that is my liability. Further, liability can be categorized on the basis of the payment period. For example, I took a loan from a bank to buy a building. So I have to repay that loan for the period of 20 years. That is due for more than 1 year. So that is my long-term liability. So whatever I have to pay after a period of 1 year, that is to be called a long-term liability or non-current liability. To run my business, I need some raw material. So I went to the vendor and I asked him to give me a credit of 30 days. So to that vendor, I have to pay the amount after 30 days. So that is my short-term liabilities. That I can say my current liabilities. The current liabilities are that I have to pay within a period of 1 year. So that payment term will decide, the payment period will decide the nature of the liability, that it would be short-term liability or current liability or a long-term liability or non-current liability. Now let's move to the asset side. So whatever money I have put in plus whatever I have borrowed, the total amount I need to invest to run my business. So I bought an office. So that office is my asset because I own that office. To run my business, I need some plant and machinery for production. So that plant and machinery is my asset. I need some furniture for my office. So that furniture is my asset. So all these assets, that building, that plant and machinery, that furniture, all are my fixed assets. Now discuss the current assets. The stock I have, the raw material, the cash I have, these all are my current assets. So meaning of current assets is that can be easily converted into cash. So whatever easily converted into cash can be categorized as a current assets. So here is the broader picture, the overview of the balance sheet items. So the concept of balance sheet runs like whatever asset the business has minus whatever the liabilities I owe to the vendors or lenders that I have to pay is equal to my capital, that owner's capital, shareholders' equity. So the assets minus liabilities is equal to shareholders' equity. On that concept, the balance sheet works. So I hope you understand the broader picture of the balance sheet, and I think that you are one step closer to how to read the financial statements. Thank you.